Welcome to the first installation of Beginning Young Alaskan Farmers Network Farmer Skillshare session. Alaska Farmers Market Association is our host, and we're so happy to have you all. It's a great turnout, and we're meeting today to learn from Ken Hoffman, a financial accountant and Alaskan farmer. He'll give us a tour of the Alaska website, the IRS website, some QuickBooks, and online features and chart of accounts. Yeah, take it away, Ken Hoffman.
All righty. Hello, everybody. So I'm Ken. I just give a quick introduction. I started my farming journey at around age 15. I started work at VanderWeele Farms, the big vegetable farm here in Palmer. They're our neighbors. So I started working there at age 15. Out in Palmer, my parents had a 1 acre hobby farm. I grew up on that. And I just really loved agriculture from a youngish age. And I wanted to be a farmer. Of course, my dad was like, no, go to college, get a real job. So I did. So around 18, I went to college and I got my degree in accounting, graduated in 2020 at age 22, I guess at that time. I started work at a native corporation as a payroll technician. That was dry as mud. Then I went to an accounting firm, worked for a CPA. And that was more fun because I was working in QuickBooks. That was what my job. And I would do QuickBooks, manage the QuickBooks for 30 other small business in the Valley. And I learned a lot from doing that. The CPA I worked under was the president of the Alaska CPA Society. So all the CPAs, when they had questions, they would call him. And he was a real stickler for the rules. So I learned the rules pretty well under him. And then while I was working as an accountant, I was farming parts of my parents' property. So they had an acre. They let me have 1/20th of an acre, small little part of the lawn. I tore it up, put in gardening beds, just like the JM Fortier style, the 30-inch beds. It was like 25-foot long beds. And by the third year of me just gardening the salad greens, I was able to gross $20,000 off 1/20th of an acre, just planting quick turnaround crops that were highly profitable, had high yield, yada yada. So then I learned that, hey, this farming thing, it is financially sustainable here in Alaska. You have a great market here in Alaska. Everything you grow, you can pretty much sell pretty easily. And so in 2021, shortly after I got married, I quit the accounting. And so I've been on my own, just farming full time since, I guess, fall of 2021. Currently, because during the winter season, you get a little bored. If you're just a market gardener, you work years worth of work in 3 months and then you're off. I wanted something to do during the winter, so I got into microgreens. So that's my current operation, is mainly the microgreens. My wife and I, we did buy a 1 acre property out in Palmer, so our plan is to turn that into a market garden. But that's going to be my secondary business. I think microgreens right now will be my primary. Then we'll do the market garden. And then we're also renting a 3 acre commercial property, which we want to do fruit and berries. So that's another sideline business. And so what I'm going to talk about a little bit today is how I structure my entities. So I have one entity, one LLC for the farm, and I have multiple DBAs, doing business as. And this comes into play with various tax structures. So if I can share my screen correctly, here we go. You guys kind of see what I'm looking at? This is my website. Shameless push for the website. So this is my website. But if you go to the bottom, you'll see something way down here. My LLC, my main business, the farm, since I don't market it out, it doesn't have to be a marketable name. It can be something more personal. So my business name for the farm is Mahiai Enterprises. Mahiai just means farming in the Hawaiian language, because that's where my family's from, is Hawaii. So I was like, hey, throw that in there. So Mahiai Enterprises LLC, doing business as Matsu Microgreens. And I have my other business, which is the market garden, is Alaska Garden Greens, which I started in 2020. When I did the microgreens, I wanted to have a great SEO, so search engine optimization. So when people say, hey, I want microgreens in the Matsu, my website pops up first because it's not called Alaska Garden Greens. It's called Matsu Microgreens. And you can have as many DBAs as you want under your LLC. So when I start doing the fruit and the berries commercially, I'll have something like Matsu Berries or Alaska Berry or whatever under Mahi Enterprises. I can have as many as I want. And as a sideline, I have another LLC, which is called like Ken and Allie, my wife, Ken and Allie Market Ventures. And under that, I have a knife sharpening business. I have an accounting business. We sell like cookies and lemonade. I have multiple DBAs under that. So I really have two businesses for taxes, but then underneath, it's almost like I have 7 businesses just to make it kind of fun. So there's that. Let me show you. This is the IRS website. Kind of boring, but what I want to show is I'm not going to be able to answer every single business question or tax question for farming. And of course, before you guys do anything major, talk to a CPA or a lawyer. My job today is just to familiarize you generally with some of these concepts so that if you have a question, hopefully you can bypass, paying a CPA or a lawyer to do a job that you can do yourself. Because, for instance, setting up an EIN, a lot of people will try to nickel and dime you to set up an EIN, but it's free. And you can do it right on this website and things like that. So when you have questions on tax returns, just go to business self-employed. Hopefully it's working on your guys' end and you can see. Here's the business types. I'll just do a quick overview on business types. You have sole prop, you have partnerships, you have corporations, C corps, and then you have S corporations, and then you have LLC. A lot of people think an LLC is its own business type. It's not. It's basically how you run. You can have a sole prop LLC. You can have a partnership LLC. You can have an S corp LLC. You can have a C corp. Basically, it's a marketing term. A lot of people today like to see LLC at the end of businesses, and it means that you have an EIN, that you're a separate entity from yourself. One way you could think about it is you're a basket, and all of your assets, your money, your car, your house, whatever, are eggs in the basket. When you start an LLC, the reason you do so is so if you have your farm assets and your personal assets all mixed together in one basket, and somebody chokes on an arugula leaf, well, they can't take your car because it's in it. What you do is you start an LLC with an EIN and everything, and they can only steal from your farm basket, not your personal basket. So for myself, I have my basket, I have my farm basket, Mahi Enterprises, and then I have my everything else, all my other fun businesses basket. Just for safety, you get better insurance rates if you do that as well. The IRS, when you go to file, if you're not a partnership, if you're not a corporation, you're sole prop. Even if you have an LLC, you file it as if it's a sole proprietorship. Most of us are probably sole proprietorships. I'll just click on that. All of you have filed 1040s. That's your individual tax return. Even though you have a business, if it's not a partnership or if it's not a corporation, it's on your personal tax return as a schedule. Most business schedules are Schedule C. So my fun businesses, my little market ventures, I file all of them under one Schedule C. Farms are different. You have a Schedule F. We all know about the Schedule F. So here is the Schedule F, profit and loss from farming. It's pretty simple. You just, if you have a tax software, it'll fill it in for you, but you should have a little bit of familiarity with some of the things in here. So here, for instance, here's employer ID number is number D. That's if you're an LLC, you would put your EIN in there. If you don't have an LLC, it's fine. You can leave that blank. It's completely optional. Part 1 is income. You can read each line, how it separates your income. So you have resold livestock and vegetables, basically, sales of resold products. You have your costs or bases, your cost of goods sold. Then line 2 is the products that you raised. And you just read through all of the different types of income, how the IRS wants you to separate the income and how the IRS wants you to separate expenses. You'll see number 16 and 17, feed for animals. 17 is fertilizers and lime. That's why there's a Schedule F, because there's different items on your Schedule F than versus a Schedule C. And this comes into play when you do your chart of accounts and your accounting. You want to separate according to how the IRS wants you to separate. Good accounting only has there's only two reasons to do good accounting. For compliance for the IRS, you don't want to get, penalties and interest, and for decision making. Anything over that, it's waste of time. If it's not going to help you make a decision, or if it's not compliant, you don't want to spend too much time on QuickBooks. It's dry, boring. Let's see, I'll go quickly. Some of you might be partnerships, so I'll just click on the partnership section. If you guys have partnerships or a corporation, you guys need to get your taxes filed pronto. They're due in 15 days. Everybody else, April 15th. Partnerships, corporations, March 15th. So get started. So a partnership return is a 1065. A corporation return is an 1120. They're in a way, they're not returns. You don't send them out to the IRS with your tax bill. It is just an informational return. So you're throwing information into it, and at the end of the 1065 pops out the numbers that you need to then throw onto your 1040. So a Schedule F is on your 1040. Everything always ends to a 1040. Your 1065, that's why March 15th is a deadline. It has to be finished, and then each one of the partners then gets a K1, and then that K1 goes onto your 1040. So just remember, get this done fairly quickly. Most programs, like softwares, do a really bad job at filing 1065s and 1120s. The CPA I worked for, most of his jobs were fixing people's previous 1065s and 1120s. A lot of people think that they can fill that out themselves, but then they always mess it up, and they always get hit with penalties and interest. So the CPA I would highly recommend to go to a professional to fill out your 1065 and 1120. It's going to cost you around $1,200 to fill it out. So before you start a partnership or before you start an S Corp, just remember that the administration costs for that are going to be really high. Keep your business as simple as you can. Don't try to make it, more complicated than it needs to be. So that's the IRS website. Lots of fun. Oh, quickly, IRS website. Here's the employer ID number, EIN. If you Google apply for an EIN, I just did it today.
Oh, gentle, Charlie.
The first 4 options that showed up on the Google were other sites trying to get them to get you to pay them to do an EIN. It's completely free. It's incredibly easy. You just make sure you're on the official IRS website and you apply for an EIN, and then you put your name, and then it will pop out a number. But it won't pop it out ever again. So save that number, and they'll never give it to you again. It's a pain if you somehow lose it. So that's after you set up your LLC.
Charlie.
This is how you set up an LLC. Here's the State of Alaska website. Okay, it's pretty easy. Go to business, corporations.
Do you hear me? You can talk to Dad about it.
Go to forms by entity. All right.
Give him that story if he needs it.
Could we make sure that I love everything that's happening here. Make sure that we're on mute. And if there is a general question that you want to ask, I think if you feel comfortable asking, make sure you do come off mute and go for it.
Yeah, please ask. If you guys have a question on a particular site, just stop me, because I might be going kind of fast on this, but there's a lot to talk about. So we'll go through question and answer for sure. So here is the not IRS, State of Alaska website, corporation section, forms by entity type. Go right here, articles of organization under your LLC, domestic. It's all online, $250. So, you know, it's a bit expensive when you're starting a business. I don't recommend doing an LLC. If your farm's net worth is like $1,000, all because you have like a wheelbarrow and a hoe, I wouldn't recommend starting an LLC. Do it when there's a bit more to lose. My recommendation, because it's expensive, $250 to set it up, and then it's something like $150 every 2 years. It's a pain. You just, let's see.
And I was told, I had a friend who had an LLC and then they didn't hit the deadline to
Yeah.
renew their LLC and was spanked with like a hefty.
Yeah. Yeah. It's a hefty fee. It's no joke. But once you set it up, so here I'll articles of organization. When I first started, my first business was with a couple friends. We started a real estate company, and we're like, hey, we want to do an LLC because it's going to be a three-way partnership. How do we do an LLC? If you search online, no one wants to tell you, or they'll say, pay us $200 and we'll set up an LLC. We did. We lost $500 paying LegalZoom to set up an LLC with the state of Alaska. And then shortly after, I figured out, oh, you can do this yourself, and it's incredibly easy. So don't pay anyone to set up an LLC. Go to the state of Alaska website, do it all on here. You fill out your entity name. I like put the LLC there because it's a nice marketing term. Purpose, any lawful. Just make it simple. Any IC code. There's your agriculture code. Doesn't really matter too much. Some folks like to put all, it's like, oh, I'm growing apples and I'm going to grow soybeans and everything. Just put one code. It doesn't matter too much. Registered agent. This was another hiccup. When I was starting my LLC, a lot of folks on Google, they're like, pay us to be your registered agent. Okay. When I asked my CPA about it, he said it just has to be a warm pink body that lives in Alaska. It doesn't matter. It has to be someone that lives in the state of Alaska. Just choose yourself. All it is if somebody puts in a complaint about your business, then they have the mailing address of the registered agent, and then you can send the mail to the registered agent that's in Alaska. So if you were, say, living in Delaware and you wanted to set up a business in Alaska, you have to have a registered agent in Alaska. You have to have somebody that's present. So just choose yourself. Super easy.
And some questions, there's some chatter in the chat here about maybe just like this, the threshold of when you want to turn things into an LLC or when you want to do sole proprietorship. Shelley writes, as long as you don't make 20,000 a year, you don't need an LLC.
You can like there's never a point where you need it. It's always just a recommendation. You could be making millions just as a sole prop DBA under your own name. But again, if somebody chokes on an arugula leaf, they can take your house. You want to separate at that point. And say if you're a millionaire and you have a farm that is still only making like $5 a year, you probably want to still get an LLC. If you have any worth to your name, just get an LLC. Just know though, it's going to cost you $250 to set it up. If you don't want to spend $250, like when I started my farm, I was bootstrapping. Man, I spent $100 on seeds, some rakes, and then I started selling greens, and I was able to turn a profit year one. And then I got my LLC just to make sure I actually wanted to do the business. I have friends that are like, oh, I'm going to start a dog grooming business. The first thing they do is they set up an LLC, and then the next day they're like, oh, I don't want to groom dogs. And then they spent the $250. So make sure you're doing what you want to do before you spend the money on the LLC. However, if you do spend money on LLC, it's yours for a long time, and then you can change the name of the LLC as many times as you want. A friend of mine, she had a college kids what was it, advising business for years and years, and then she's like, oh, I want to be a farmer. And she took her LLC, she changed the name to a farm name, and it's still going on. So you can save the $250. And so I have a couple of LLCs that the business that I have it with, I'm not using anymore. So I'm just leaving it, and then I'll churn it into a different business. eventually. So it's yours. And then you fill it out. You're both manager and member. Manager is if you're managing the business, and member is if you own the business. Sometimes you have a manager who's managing your farm or whatever, but they don't own any stake in it. And sometimes you have owners that, you know, vice versa. So I'm both on my businesses. I have to do all the work and I own it. So maybe someday I'll get a manager. So there's that. What's a lot of fun though is searching around on the search corporation. So you can look at every business, all right? So a lot of time I look up my friends, I'm like, hey, how do they structure their business? So if you have questions on how to structure entities, you can look up my business, which I'll do after I look at VanderWeele's. So my friends, the VanderWeele's, they have multiple baskets, right? VanderWeele Farms makes millions and millions and millions of dollars a year. They make millions. Each one of the members makes millions, right? The farm makes millions. The properties make millions. So they separate it all in different baskets. So here's the first one. Here's VanderWeele Farms LLC. Oh, is it going to give me a hard time? All right, here it is. LLC. There's the entity number, when they formed it, 2001, their address. The registered agent is Ben VanderWeele. Here's all the members, 20%. There's 5 members. So therefore, they're a partnership. They do a 1065 every year.
What? You're about to turn the internet off.
And you can look at the reports. So this is the operating business. So when you start up, when you eventually get to a point where your farm is making a lot of money and the land that your farm is on is also making a lot of, is also very valuable, you want to separate your operating business from your asset business. So they also have a business called Lugdunum Properties. It is their 500 acres that they own.
150 upset people. And they just put the.
Sorry, Ken. I don't have the power to
happened within
easily
like the
mute
next hour.
people.
Oh yeah, no problem.
If you're off mute, will you please mute yourself? Aha, all right.
Easy peasy, cool. So they have an asset business, which is the 500 acres, right? Because it's worth millions of dollars. Their operating business is worth millions of dollars. So therefore they separate it for safety, legal safety. Most businesses do this. So when I was doing accounting for like dry cleaning businesses or whatever businesses, they would have their restaurant is, for instance, they would have the operations of the restaurant, and they would then pay rent to the real estate business, just because of the safety. So now that I have land, my land that I own, even though it's an acre, I have that under I'm going to have that under its own LLC, and Mahi Enterprises is going to rent from my property LLC. So that, again, somebody chokes on arugula leaf, they can't take your land, right? So it's when there's a certain dollar amount to a business, you kind of want to separate it just for safety. And a lot of real estate owners, if they have multiple apartment buildings, every single apartment building will have its own LLC. So I know some real estate tycoons, if you look up their name, all of these different LLCs will come up, and they're just home addresses, but it's like 1440 East Drive LLC. So it's interesting to see that. And that's how you make money in business. You generally make money not on the operations, but on the property development side. So restaurants, they basically run it as a restaurant for the cash flow to pay for the real estate. And then when they want to retire, they sell the real estate. Everybody does that. That's why we're having issues with losing farmland. That's why the farmland trust exists, because in farming, they do it the same thing. They run the farm, they grow vegetables to pay for the land, and then their retirement is to sell the land. Pretty much every business owner does this. It's how businesses are run. So that when you guys are farming, just think of that. If you're renting land and you're doing agriculture on rented land, it's less profitable than if you're doing that on your own land, because you really want to get your own land. That's how you're going to make money in agriculture. Big money. Okay, so next I will go through the rest of our time. QuickBooks stuff. Let's see. I need to stop sharing and share a different page. I'm going to share my Microsoft Excel spreadsheet of a chart of accounts. Super fun. So, how many do you guys use QuickBooks? Do a lot of you use QuickBooks for your farm? Do you guys use any accounting software? Yeah. One person? Does one person at least use QuickBooks?
Starting to use QuickBooks.
Alrighty, cool. Alrighty, that's what I use. That's what I'm familiar with. My little accounting firm is what I do. Is I help people clean up their QuickBooks, get it set for the CPA. Because the CPA charges like $500 an hour to do this work, while bookkeepers are just like $100 an hour to do the work. It's way cheaper. So when you have your chart of accounts, you're gonna have like cash accounts. You're gonna have accounts receivables; those are assets. You're gonna have liability accounts, equity accounts, expense accounts, income accounts, and then you're gonna have your retained earnings at the end. So, pretty dry, in fact. Let me see. I'll go right to the equity section because that's what matters about the entity structure. So if you're running a sole prop LLC or just a sole prop, you're going to have 3 accounts. You're going to have owner's equity, what the business is worth. You're going to have owner's draws, what you're taking out of the business, which isn't tax deductible. And you're going to have contributions, what you put into the business that isn't taxed. It's money that goes into the business that the IRS can't touch because it's already been taxed. If you're a partnership, you get 6 accounts. Everybody in the partnership, if there's 2 people, it's 6 accounts. You have 3 people, it's 9 accounts. Everybody has an equity, a draw, and a contribution. So in accounting, when we were doing QuickBooks cleanup, we would scroll right down to the equity section. If it was a mess, that's what we had to fix because that's what the taxes. You have to be able to see what the basis is in the business. Owner's equity. Again, it's the number I like when I look at people's balance sheets. So balance sheets is assets, liabilities, and equity. Those are those 3 accounts. Profit and loss is income and expenses. And then your net income. And that net income then goes to your balance sheets. But the balance sheet's the most important part of your books. But I will scroll to the end, and I have a couple accounts that are farm related that you want to make sure that you have in there. Because of the Schedule F, you have to have an account that is sales of products raised, and you have to have an account that is sales of products resold. So sometimes when I run a farmer's market, my buddies will give me vegetables that I didn't grow, but I sell for them. I have to put that income into that account. The Schedule F has an account for custom hire income, so you have to put that in there. You have to have your cost of goods sold for the resold items. I have a packaging account. I spent a lot of money on all of my microgreen packaging because I use the cornstarch. So it's a pretty penny for that. Seeds and plants, that's a fun account. That's where you, of course, put the seeds. If you're doing an orchard, you want to put your the cost of like apple trees, currant bushes in there as well. You have to have your chemical account, feed, fertilizers and lime, ag program payments, crop insurance payments, proceeds. Basically, pull all of these from the Schedule F. That's what the IRS wants you to have. So. The setup is really important. Once you set up your QuickBooks, then it's smooth sailing from there. Once you have the correct accounts. So, pay a bookkeeper to set it up, possibly.
I just dropped the link to Egg West. They're a farm credit lender, and they have lots of great templates on how to, prepare lots of these accounting, start your business plan, and they also host workshops on how to do lots of these things. And even if you're considering on lending from them, if you are or aren't, like these credits will go towards like your credit to then lower your interest rate. So I definitely suggest looking at Egg West and learning from starting there. And then, you know, maybe you get your terms and vocabulary like up to snuff and then kind of start diving into more of these YouTube situations. I will also say that I took a Food Farm Institute boot camp. I did a part 1 and I'm still about to do part 2. And they were like very much like do QuickBooks, don't do anything else. That's everything that like I think mostly everyone uses QuickBooks, and it's just, anything else isn't like worth it. That's not, I'm not trying to be an ad for them, but that is what the Food Finance Institute told me. But
yeah,
I do
unfortunately, everybody uses QuickBooks. So
Yeah.
if you use a different program, a CPA is going to hit you with an extra charge because they have to learn the other program. So Intuit, so the Intuit is the company that does QuickBooks. They're a pain to work with, and QuickBooks is not perfect at all. It has a lot of problems, but unfortunately, it's just what everybody uses. Yeah.
I received this question, Ken, from someone who couldn't be here today, and their question was, I'm curious about the pros and cons of how to claim expenses and income for tax purposes when you're consuming a lot of your own produce from your farm or homestead, and whether it is better to claim lower expenses and higher income by buying back produce from your own consumption, or to just claim the percentage of expenses for the farm, reserving the rest as personal, thus having a lower claimed income. I can drop that question in too, but that obviously I read that.
Well, I definitely wouldn't. I mean, okay, I don't like paying taxes, so I recommend not buying the produce from yourself, because anytime you grow that income account, you're gonna have to pay taxes on that. A percentage of that goes to the government. I recommend not doing any accounting for that. If you're growing vegetables and there's extras and you're eating them, that's fine. I would just keep it off the books. The IRS doesn't know. So that's me as not as an accountant. As an accountant would probably tell you, oh yeah, buy the produce, blah blah blah, claim it, but I wouldn't.
I guess maybe if you're being strategic and you wanted to go for a loan and you wanted to have,
A higher income, I guess so. I guess so. You could do that, but that'd be
not.
interesting.
Any other questions?
Yeah, I had one. So thanks so much, Kenneth. This is very, I've learned a lot of things from you here today. So
Good.
when you went about setting up your LLC, like did you use YouTube there too? Or did you work with people? Yeah. How did you go about to set that up properly?
Set up on like the state of Alaska website.
Yeah, yeah, the LLC, the supporting documents, and like for creating an LLC, because it feels like a little bit overwhelming for me. It feels like I probably want help for it. I need some help for it, but yeah.
Yeah, well, definitely. YouTube has a ton of information on LLC setup, but then they're also going to try to sell you their program, or like use LegalZoom. You can do it all for free, or at least for $250. Right? You can get the EIN for free through IRS, and then you can get you can set up your LLC in 10 minutes on the state of Alaska website, and then you're done. It's pretty easy.
Okay.
Yeah.
Okay. Thank
Yeah.
you.
And if you have any issues, I think you can call the state of Alaska commerce side and say, hey, I'm setting up LLC. What do I do? And they'll tell you.
Okay.
Yeah.
Sweet.
So an EIN is like a social security number for your business.
Yeah. So in the IRS, the way they keep track of you is it's called ITIN, Individual Tax Identification Number. Most people's ITIN is their social security number. You just use the same number. But for businesses, LLCs that are different from, individuals, they use the EIN, employer identification number. So yeah. And a lot of when you set up your bank, Well, like, so I use like Matt Valley Federal Credit Union. You have to be careful when you talk to the tellers or to the bank folks. They don't necessarily know how to do how entities work and stuff. They'll be like, "Oh, you have to be an LLC." Like, I am an LLC. They're like, "No, you have to have two people." It's like, "No, you don't have to have two people for an LLC." So just be warned that sometimes the bank tellers don't know what they're talking about.
Hey, Ken, I don't know if you can hear me. I want to know
Yeah.
about it. I'm 1079 for buying equipment.
Oh,
Do you know anything about that? I've seen lots of stuff written, but
oh yeah.
Is there a time to purchase and not purchase? And is that still, can we write it all off in a year? And
Yeah, like special depreciation and things like
Yeah.
that.
yeah,
Boy, most of the time when I was looking at the CPA's work, they were writing it all off every year. Unless you were like a massive, like multi-million-dollar business, then you have
Get
to
it, yeah.
push it to the next year. You just write it all off. He was writing, the CPA was writing everything off in the first year. So,
Thank you.
and when I looked at my tax return, when he did mine, he wrote everything off the first year, unless it's land and a like a big business, not business, big building. Then he would roll forward and depreciate over Mackers, which is like
Sure.
the IRS, depreciation
Yeah.
schedules. So,
Thank you.
but yeah.
There's a question in the chat here asking about you and your wife and your business together. Do you keep it as a solo prop instead of a partnership for simplicity?
Yep, absolutely. It would be really expensive if we wanted to separate it. So since we file married filing joint, we're just one person. It all goes into, we share all the bank accounts, we share all of our money. We don't separate anything in our finances for our marriage. So it's easier just to say it's both of our businesses. But if you look under the state of Alaska website, for me, it's just I'm the only one listed. So yep. Don't separate it if you're married. Keep it all one. It's a lot cheaper tax wise.
Hey, thanks for all the information, Kenneth. Really appreciate it. I had a question about, when you set up your LLC, at what point do you decide to create another doing business as entity? And what are the parameters around that? Like why set up 6, 7, 8 possibly, right? Or even 2?
Yeah. So how I see the doing business as, or how I use it, I think, and I've done a lot of research on this, and the CPAs seem to find it okay. I just use the DBAs for marketing purposes. So I have my one business, Mahi Enterprises, and then I want to have multiple DBAs, different names, just for the marketing. So I'm Matsu Microgreens. It looks a lot better on the packaging than like the enterprises names. And you can have multiple DBAs. You can have 8 or 9, like you said. The problem is when you have more DBAs, is the accounting for it. The IRS doesn't require you to separate it, so you don't have to do it for compliance. But if you want to have multiple DBAs, you're most likely are doing it for decision making. So on your QuickBooks, you're going to have something called class codes, and you can separate each money in and money out by classes. So on my personal QuickBooks, I have a credit card for each DBA. That makes it really easy to separate. So I know on QuickBooks, if a certain transaction is coming through one credit card, I classify it as all Matsu Microgreens, or I classify it all as Alaska Garden Greens. And so if you had 9, I would recommend a credit card for each one for ease of accounting, and classify it to each one, each DBA. And then when you pull your profit and loss statement on QuickBooks, you can select separate by classes, and then you can have an income statement for each one of your DBAs. And then you know which one's making money. I have friends that they have a coffee business. They roast coffee and they sell the beans, and they have a mobile van that they make like espresso, and they sell coffee. Both of them are a DBA. It's under one business, one coffee LLC, but each one has its own DBA. And then they have to separate that in their QuickBooks to know which one's more profitable. And I think in their DBA, we do journal entries for them to show the mobile business buying coffee from the roasting business to see which side of the business is making more money. So some folks, they're making jams and jellies. They have a berry farm and they make jams and jellies. they sell fresh fruit, and they sell jams and jellies. They might just be Alaska berry, but in their accounting, you want to separate it by class codes to see which one's making the most money. Because if you're selling your fresh fruit too cheap to the jam business, or if you're selling your jam too cheap, there's a lot of decision making. There's a lot of ways to play with the numbers. So yeah.
Okay, cool. So it's not like any specific tax or accounting purposes. It's just what's easiest to
What's easiest for
net
you?
profit loss and
Yeah.
Okay. Cool. Thank you.
Yeah, of course.
How is the structure of your LLCs in when you're applying for now I'm blanking on the acronym, but the reimbursement cost transportation that Alaskans are qualified for? I can imagine when you have an LLC and kind of all these enterprises underneath,
Yeah.
that could maybe get a little sticky filing for those claims.
Yeah,
Yeah.
I just, anytime I filed for, say, a city business license, a borough business license, for any of these programs, grants, things like that, normally they'll say your business name, and then underneath they'll have DBA. So if you want to specify which DBA it is, but normally for business name, you put your LLC name with the EIN. Especially if it's asking for your EIN, then you go back through the form and say, okay, I need to make it my LLC name. So sometimes just by reading the form, you'll know which one they're asking for. Normally, put your LLC, your farm business. So for the transportation credit, I put my LLC. Yeah, I didn't want to do 2 forms for each DBA. So, yeah.
I'm sure we could talk a lot about this. Is kind of opening up like a whole different question, and maybe it's a question for everyone too, is like, what do farmers need most to understand or like make their pathway to profitability? Like you talked about making, accounting, you want to make decisions. Like, one, what do we want to make decisions on? Maybe that's a farmer question. And then 2, like, what are the things that we're looking for in those accounting charts to like help us make good decisions?
Yeah. Well, I think for farmers, I really like the separating by class codes. When I first started the market gardening, I had 5 products. I did spinach, baby kale, baby lettuce, radishes, and the salad turnips. And so when I first started my first year, I wanted to know which one is really making the most money. And so I separated anytime there was a transaction, or like through my seed order, I would separate each one. And anytime I had income coming in, I would separate all of the income according to the products. And then at the end of the year, when I would run my P&L, I'd be like, wow, this product made the most sales or had the most net income, right? Some of them might have high dollar, but then also high expenses. So it's fun to figure out what is your most profitable crop. And salad turnips and scallions are by far for me. So, yeah. It's all part of your crop planning, and then which ones are the most profitable. It's in my opinion, since farming is just like any other business, you want to have your few products that you really focus on. You want to have like a list. You want to list all your products and have number 1, 2, 3, 4 of what you're going to put the most energy in. Because during the height of summer, when there's 500 things going on, you need to be able to say, okay, this is my priority. This crop is number 1. Then you go to the second crop, then the third crop. So I would never, if my radishes needed harvested and my baby kale needed harvested, I would go for the kale first, then the radishes. So just in case I ran out of time, I guess I lost the radishes, but at least I harvested the most profitable crop. So just part of your crop planning.
How do you measure? What do you use a certain system to measure, your outputs and your inputs and the relationship?
Yeah, well, so like on Johnny's seed catalog, it gives you a lot of information. It gives you what your plant spacing is. That's a big deal for me. It's your plant spacing and then your production per square foot or production per plant. And so before you even start buying your seeds, you should have a spreadsheet of all of the crops that, at least on paper, look the most profitable. So the one I always use as an example, which is really sad, is Brussels sprouts. if you go on Johnny Seeds or any seed catalog or just Google Brussels sprout spacing, it'll tell you something. Sometimes they'll say 18 inches apart and you can only get one row in a 30-inch bed. Well, in a 25-foot bed, that's only like 18 units, if my math is right, 18 units. And then you have to figure out what's my sales price per unit. If I want to make $300 a bed or whatever you're shooting for, then you have to divide the units by how much money you want to make. And then you're going to see, wow, I have to sell each Brussels sprout like bulb for $20. That's not going to work. So then you go to another product. So you do it all on paper, try to see what is the best. And so when I first started, I of course used JM Fortier, Curtis Stone, all those little market gardeners. They already did the work for you a lot of the time. And you can see that, wow, a baby arugula, it produces like 50 pounds on a 25-foot bed, and I can sell it for $20 a pound. That's a lot of gross income. So that's how I was able to get 20K off 25-foot beds. I would make sure that I grossed $1,000 in one season. And sometimes another factor you want to think about is how much time are they going to be in the bed? So Brussels sprouts, they're there all year. So you're only going to get one flush of products. Baby arugula, I'm able to get 3 flushes. So sometimes if I plant a baby arugula, I can harvest 50 pounds, plant another baby arugula, harvest another 50 pounds, and do it 3 times over. It's 150 pounds at $20 a pound. If everything works out, of course. Of course, it doesn't always work out. There's slugs, rain. They're all natural products. But at least on paper, you should be able to kind of see what you want to put your focus on. And then what's the sales, like reliability? Will you be able to sell 50 pounds of a baby arugula every week? I don't know, That's part of the crop planning, is the profitability side of it. I recommend focus on 5 if you can, and be known for those 5 products. Yeah. Lean Farming is a great book. Yeah, Earn Their Space. Yeah, that was one of my favorite, Ben Hartman. He's a good author.
Really quick, you said a phrase JN14 or?
Oh, JM Fortier. He's the Canadian market gardener. He wrote the book, the Market Gardener, or Market Gardening. I read that when I was in my teens, and I was like, oh, this is the future. And then I finally was able to do exactly what he said. So I prefer, if I was going to read a farming book and start with it, I prefer Urban Farmer by Curtis Stone. He's even more specialized in smaller scale, and he makes more money. He was making like $100,000 on a 1/4 acre. So I like that. While JM in his book, he was making $100,000 on 1 acre. So but he was having more fun. JM was doing the tomatoes, the cucumbers, the garlic, the fennel, all the other things. So
Thank you.
yeah.
It looks like there's another question in the chat.
Yeah, there's another question in the chat here that asks, so if you already have an LLC, you can have a DBA XYZ. Do you need to go on the IRS site and register this? To register DBAs?
Nope, DBAs, you don't have to register. So Matsu Microgreens, in the IRS's eyes, does not exist. It's just another name for Mahiai Enterprises. They really don't care. And when I do state business licenses, county business, borough business license, they don't care. But you do want to register it with the state. So,
okay.
Yeah. And I guess I didn't show that on the state of Alaska website. To do a business license, so basically start a DBA, it's $25, I think. It was free for the longest time. Now I think it's $100, and then every year it's $25. So that's another thing. If you have 9 DBAs, when you're going to have like a $500 bill every year, every other year. So another thought. And if you guys ever have questions on QuickBooks, accounting, entities, you guys just email me at my Microgreens Gmail, and I'll answer whatever questions you guys have later on. I know it's tax season, so we're all thinking about it.
Okay, I have a last question, Kenneth. So with you, because you're up in Palmer, and so what is kind of like the area the region or the of your products? Like how do you sell all the way to Anchorage, or you have plenty of market just within your neighborhood in Palmer and or maybe you have to go to Wasilla? I'm just curious.
So I guess it depends on each product, but yeah, I have to go to Anchorage.
Mm.
There's not enough folks out here in the valley to just sustain it. So,
Yep.
so if you include Anchorage in your product area, then you have 500,000 people, which still
Right.
isn't very many worldwide standards, but for Alaska, that's what we have here is 500,000 for the Matsu and Anchorage. Yeah.
I call it Los Anchorage.
Yeah, I know.
Thanks, Kenneth.
Yeah, of course. But if I was doing berries, I think I would only have to be in Palmer. There's a huge demand for berries out here. So it depends on, yeah, how many products you're producing. The microgreens, I have to go all the way up to Girdwood to get all the sales that I want.
Thanks,
Sorry
Brooke.
if I keep asking a lot of questions. Not sorry. I love learning. Kenneth, thank you so much for doing this. Do you see any trends happening like overall in the Alaska food production landscape that you're trying to ride or get a handle of? Or is the market just like there's not enough supply, there's really high demand, so it's kind of like growers market?
Yeah, I would definitely say we're in a grower's market. There's not enough supply for the demand at all. So we need more farmers producing all sorts of products. There's a lot of products out there. When I talk to other farmers, we just some other younger farmers like me, we were always talking about the next product. Like I've been doing a ton of research on saffron, indoor growing of saffron. University of Vermont is doing a huge study on saffron production because they produce their flowers during February in greenhouses in cold climate. No one's doing it in Alaska, so somebody could go out there and start doing that. And then in what was it, the United Emirates, they're doing it indoors now. So there's new information for that. University of Minnesota is doing blackberries in high tunnels, which is pretty neat. There's so much potential products out there. And me as a market gardener, I'm just doing the microgreens and then like salad greens and turnips. But yeah, there's a lot of different products you could do and make a good living on. Yeah. And by good living, I mean make $50,000 in the summer, because again, that's only half the year. So you could do something else during the winter. So you could hit if you wanted to make $100,000, it's doable. So.
How quickly do you classify your assets depreciating every year?
I just depreciate them all in the first year. I don't have anything massive. You can't depreciate land. I might have messed up and said that you depreciate land. You don't depreciate land. But if you had a building, then you would do it over, say, 40 years. It's a long time for certain buildings. But otherwise, tractors, large equipment, you depreciate all in the first year. Yeah. And then it depends on your capitalization. So some CPAs will say don't capitalize, so don't say it's an asset if it's less than $600. So I have like a $500 salad green harvester from Farmer's Friend, and that is just a small tools and equipment. It's an expense. It goes on my income statement for the first year. And then it's out. It doesn't show up on my accounting anymore. But if it was $600, it would be a fixed asset. It would sit on my balance sheet, which meant that it would affect my net worth. So technically, IRS doesn't know that I'm worth an additional $500 just because it's not there. That's how we do it in America. We use GAAP, and that's the GAAP rules. But I won't go into there. So.
Sorry, can you talk like a little bit more about that? Like, so for instance, yeah, like this year we bought a walk behind BCS tractor
Yeah.
with some implements, and
Nice.
we were debating whether we put that just like what to put that under depreciation, or if we put it under tools.
Yeah, don't put it under, don't expense it. It's not going to go on your income statement. it's gonna stay in your balance sheet. So you're gonna, when you, yeah, you want it to stay as a fixed asset. Yeah. CPAs would know what to do with it, but you want it to